Good morning, ladies and gentlemen. So today we gapped up, and in general, I deeply dislike gap ups because gap ups lead to a big fall off in put side IV, and a sell off into that will be very hurtful because first of all, puts are now underpriced because people who are long puts, they were carrying puts overnight, they dump it in the morning. So when they dump it, the supply goes up like anything, and that leads to a big fall in price. And if there is a down move, then those puts are really going to hurt. Now, I took a 2% stop loss for the day. I am very happy with the fact that I took a stop loss, took the exit, stopped trading for the day, and just said tomorrow is a different day. There is absolutely nothing wrong in taking a stop loss. It just means that you called that day a day and you said today is not the best day for me to be trading. And that's about it. Um, if I didn't take a stop loss and looking at where the market is now, I would be down 4.5% on capital. Now that is what will hurt you. One day of doing something stupid like that is what will hurt you. So don't behave in a stupid manner. And when the market tells you it's not your day, when it mean your trade might then work out, might not have worked out for so long, but if you have defined for yourself that this is my maximum risk, and when you define that risk, be ready for that risk. Like be able to smile and say, yes, I've taken a stop loss. And that will show you that you don't have the fear to get out of a losing trade. And that is what is important. You need to always be fearful of not taking your losses in time. Don't be fearful of taking your losses, but set a certain standard and stick to that standard. So more or less, we had a gap up and big runoff, and that led to an explosion on the puts. And I just took the exit, and that's the summary for the day. Not much else. These kind of days happen, especially when option prices are. I mean, the other money straddle isn't even pricing in a 200-point move, and you have a 200-point move in the first 1 hour of trading. It's bound to happen. So, I mean, this is going to be a very short video, but I think if anything, the takeaway from the video should be happy to take your losses. Like genuinely feel happy to take your losses, and when you do that, you can tell yourself proudly that I have genuinely accepted the risk of any particular trade. You're not going to win on every day, and on the days you lose, you want to lose only what you're willing to give up. Also, just to add one more thing, which I thought was a good example, is how you shouldn't blame the market. Now, if you notice, for months together, I've just been doing strangles and been super risk off, super OTM. And suddenly, when I decide that, okay, I'm going to start doing at money straddles instead, go back to a relatively higher risk reward trade. Now I can be like, as soon as I started doing that, the market is now behaving violently and making this kind of run off moves. But that would be the stupidest thing ever. Don't blame the market. The market is never at fault. Anything you do is completely in your control, and anything that goes wrong is 100% your fault. The moment you start getting into blaming markets, operators, institutions, every Tom, Dick, and Harry, you know you're already losing the battle or in the path of losing the battle, because once you start making excuses, you're going to make excuses throughout. If you are not responsible for your outcomes, then you are kidding yourself. Thank you so much for watching. I'll be traveling over this weekend, so I will catch you next on Tuesday. So I'll be trading next on Tuesday. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Looks like we're opening gap up. And interestingly, after closing in the negative on the S&P 500 and Dow, the futures are now in the positive, almost recovering half of yesterday's losses. I think the idea will be we will continue to consolidate, and most likely our recent swing lows, which is around the 15,600 mark, and recent swing high, which is around the 15,900 mark. These two are most probably going to hold. That's the theory I'm working with. So to play this, I will be taking this position, which is the 15,900 call, 15,600 put sell. The idea will be until we break 15,700 on the downside or 15,800 on the upside. Will not do any adjustments to this position. Oh, nice. There are no restrictions. That makes my life easier. Okay, so I've just entered the position, and the idea for the day is exactly that. That until 15,700 is broken on the downside, or 15,800 on the upside, will not be doing any adjustment. If that break does happen, then we'll adjust accordingly in either direction. We'll keep you posted. The time is 9:18. Also, I need to start taking a look at what's happening to these trades. My Adani trade I might book by the end of the day. I'll see. And Power Grid is finally giving us a profit because the results are out. Results are quite good, and the spot is perfectly centered around our strikes and should start leading to a fall off in the premiums as the days go. It's already in a profit and will continue to um, fall in IP unless there's a big move on the spot. So for now, once again, trailing stop loss on Power Grid, trailing stop loss on Adani, these two. Everything else we're going to hold till Tuesday. We had some kind of a runaway down move, and I was forced to move the calls to 15,850, and yeah, quite a dip, almost about 60, 70 points. Right from here all the way till here, moved back. I just moved down the calls a little bit to take additional credit. Of course, now that that has reversed, it is these calls are bleeding, but can't be helped. If these puts are going to spike to uh, about 80, then I need to take in additional call set credit. So yeah, first difficult delivery has already been bought, and this is what we've done. Now, if we start heading breaking the day's high, then with reverse, just take this, roll it back up here. Okay, some changes made. So what I'm expecting is not too much of a move from 15,700. So rather than having a triangle, which will have to keep getting adjusted in either direction at each point, giving up some reward and giving some slippage, I will just work with a at the money straddle um, and more or less see what happens. If we break down, then we'll go inverted with the calls. If we have a breakout, then like breakdown as in we have to break yesterday's low, swing low. So it will be closer to around 15,600. I'll start making an adjustment once we break 15,650. Otherwise, I'm going to sit on this straddle position, which I find all said and done is relatively the most attractive position at this point. Okay, so that's about it for the day. Took about 2% stop loss on what is now the margin. My margin value available keeps going up, so the percentage terms vary. Basically, uh, given the current premiums, this is the risk that one carries because if the at the money straddle is pricing in only 200 points of risk, and out of that 120 130 points or rather 200 points of a move happens in the first trading hour, whereas that's the risk being priced for the entire week. This is what is going to happen. It's a risk and it cannot be avoided. I'm not unhappy with how the trade went. This is a natural outcome, and this happens. So yeah, a loss, but I'm not too particularly concerned about it. I feel like I exited at the right time as well. I bought back the puts at about 140, and yeah, then of course I tried to sell the 15,600 put and realized very quickly that that would be a mistake. So started exiting from the 15,600 put because as soon as yesterday's swing low broke, there's no point in, there's no way that trade works out anymore. At that point, you're just sitting and hoping. You're hoping that you get to see some kind of a buying of the dip, and if that buying of the dip doesn't happen, then it's going to cascade out of control. So beyond that, what I try to do is, I mean, one approach would be trailing the stop loss on the 700 call. But since I had already reached the 2% threshold, which I don't want to cross, because lately, given current situation, I'm not going to be able to make a lot more, given that margin is the way it is with peak margin and intraday restrictions. So I can't afford to take a bigger loss than that. And I'm comfortable taking the loss. I will take the loss. So that's it. So I trailed a little bit on the call side, but more or less exited the same time as the puts, and then exited my hedges, which had gained like half a point or whatever due to the spike in IV. So yeah, 2% stop loss, but this totally happens, and there is nothing to feel bad about. Market is having some kind of an episode, continues to run away on the downside, and yeah, should be an interesting session all said and done. I was trailing the exit on Power Grid. I wanted it to break 235 on the downside before taking the exit, which is what I did. I exited it and a mild profit. The idea was to benefit from the fall off in IB once the results were out. This Adani ports as well. My current position, it is in a slight profit. I will be taking an exit on this as well. So I will wait and see if I get a good exit intraday, else I will close it by the end of the day. Yeah. Thank you so much for watching. Today's been a tricky day, so I hope you all had a good trading day.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.